You're listening to Mortgage 101. I'm Clinton Wilkins, and this is a special episode that we're going to recap the last year of the show. Cast your mind back to early 2025 when things were ... different. With so many Canadians facing renewals this year, the decision whether to refinance, consolidate debt, or just extend your amortization has never been more relevant.
Okay, so when you're renewing, your mortgage renews, is that a good time? That's probably the optimal time if you're going to amortize and refinance. That's probably the best time to do it, is it not?
I think the best time to do a refi is at renewal.
Yeah.
It's not always the time that people do it, though, Todd.
Yeah.
You know, I think the best time to refinance is the best time for
When
you.
you need it.
And everybody's situation's different.
Yeah.
And I'm going to talk a little bit about the mechanics of a refi.
Yeah.
You can refinance conventionally up to 80% of the market value of your home.
Yeah.
Okay. The reasons that somebody may refinance is to consolidate, consumer debt.
Yeah.
Maybe they want to refinance to pull out some equity to buy a secondary property or a rental property.
Put a roof on the house.
Maybe do some improvements to the property.
Yeah.
Exactly. And the other reason is maybe for investment purposes.
Yeah.
So there's a wide range of reasons why people refinance. And I think one of the reasons that we really don't talk about that much is sometimes people refinance just to extend the amortization to bring down their borrowing cost. That's a really big one right now, especially with consumers that are coming up for renewal. When we talk about this renewal cliff, I'm not sure it's going to happen, but 60% of Canadians have their mortgage coming up for renewal this year and next year. And those Canadians are having it typically, if they had a fixed rate and interest rate that's lower than where the rates are today. Yes, I do believe the rates are going to go down. Who knows what's going to happen in the U.S. and how that's going to impact us. And we need to remember that the fixed rates are tied to the bond market. And the bond market has been, really increasing lately.
Yeah.
And the one thing that I'm really watching is the Bank of Canada.
Yeah.
We had more decreases last year than we thought that we were. But I think we're going to still see some further decreases this year. Our economy is not strong in Canada. The GDP's low. I'm watching the Canadian dollar. Yeah. And I'm confident that we're going to see some more cuts from the Bank of Canada. I think they want to spur some spending from Canadians, and they want businesses to borrow and they want consumers to borrow, even though consumers are at really all-time highs of consumer debt.
What about employment in general? I mean, obviously people look, if you're up for renewal and you want to refinance, you need to consider your employment situation.
Employment's important.
Yeah, huge.
Certainly.
Your credit situation as well, right?
Credit, employment is very important. Obviously, the assets are important. The value of the property is important.
Yeah.
All of these things come into play.
Yeah.
We really wanted to understand some of the strain that we were under. Tina, a licensed insolvency trustee and senior vice president with MMP Limited, provides us insights into the myths about bankruptcy and how learning more about your finances is the first step to lifting that weight off your shoulders.
So when somebody comes to us, we do a pretty detailed assessment of their financial situation. And if their credit situation is not too severe, we can look at sometimes just helping them by doing just a simple budget fix, right? Reviewing their budget, which may free up some cash. Sometimes they have access to some assets which they can use to pay down debt. Or maybe they may be a candidate for a consolidation loan.
Yeah, and I've had some referrals from your office as well, for customers that a refinance makes sense and they just don't think of that even as an option.
Exactly. Mm-hmm. But for those who, are more severely indebted, we often will suggest and work with them to do either a consumer proposal or a Division I proposal, or a bankruptcy. And when I'm talking proposals, a proposal basically is a formal debt settlement.
Right.
And it's a different mechanism than a bankruptcy, but both are legislated under the Bankruptcy and Insolvency Act.
These are federal laws, are they?
Yes.
Yes.
So both basically they provide a stay of proceedings, which is a stopping of collection action and legal action from the creditors. Both are a mechanism or a means to pay down a portion of your debt and to discharge your debt. And both offer financial counseling sessions, which can get you on the road to make better financial decisions going forward.
Wow. Do you find that that people often have a real sense of relief? I'm sure that you can see that after a session with them and you should empathetically explain what's available to them. You might probably see a weight lifted off them, eh?
I've had people tell me that they haven't slept in years. And even before we actually sign the formal documents, they're already starting to see that there is a light at the end of the tunnel.
Sure. Yeah, amazing.
Then in February, we touched on the busy real estate market. And in the spirit of the season, we discussed the love of your home. Is your home simply a place that you live, or is it a financial asset? We explored why treating your home like a business decision can make a big difference, especially when it comes to protecting its value and planning for the future. And I think that's where it's really hard sometimes for people to divide the love for their home and the business for their home. And I think it's detrimental in some cases. Yeah. And, I may be callous because I'm looking at this all day, every day. But for me, it's transactional and it's a business. And the home is often the biggest asset a family has. But some people don't look at the home that it's an asset. Yeah. But it really, really, truly is. And there's so many Canadians that are living mortgage to mortgage or paycheck to paycheck. And, that's really their retirement plan, is selling this house and using that money to then invest or live off in retirement. Yeah. And it can be a really great asset. Typically, real estate, at least here in Halifax and Atlantic Canada, has increased. We've never had the boom that they might have had in Ontario and BC, but we're also not suffering right now with their values have really decreased. Honestly, the values have gone down. We're definitely, our prices are continuing to increase, maybe not as fast as they were, the last couple of years, but that's also healthy. And, real estate here typically is a very safe investment overall and has been for many years. And I think going forward, just based on the amount of demand we have in our market, it will be a good investment going forward.
Yeah, for sure. But again, I view a home and you deal with people with different mindsets, but I view a home as an asset. I really do.
I do too.
And I do love your home, and that's important that you do love your home. But I think that at the end of the day, if you view it as an asset and a part of your business and your retirement plan and the whole thing, I think that's smart and prudent. What do you thought?
I agree. And where the home is the biggest asset, I see so many people that are just so focused on getting mortgage-free. But yet sometimes they have a whack of consumer debt, or they're sitting in this asset that really needs some improvement. You need to protect the asset. If there is some renovations that you want to do and you're not that worried about the cosmetic, at least make sure the envelope of the house is good and secure. When we're talking about roof, we're talking about windows, we're talking about exterior siding, making sure that is safe and secure. It will protect the asset and also will help improve the value as well. Yeah. I think that's something certainly to take into consideration. And I think it would be remiss for us not to mention, not everybody loves their home. I think there's people that are renting that want to get into home ownership. I think there's people that own homes that are looking for a different style of homes. And I think we need to be cognizant of that. And I think there's going to be a lot of transactions here in 2025. The realtors have been coming out and saying, we think that there's going to be at least 5% more transactions this year than there was last year. And I can tell you January has started out very, very strong.
Why do you think that is?
I think there's pent-up demand.
Yeah.
I think we were in a higher rate environment last year from a mortgage lending perspective, and the rates have started to come down. We're going to talk in our next segment some of the uncertainties. Obviously, we don't want to be doom and gloom. We're going to talk about what we know right now. Yeah. But I think there's going to be more people coming into the marketplace. One thing that, and the one thing that we need to remember is as the rates continue to go down, I think there's going to be more and more buyers and borrowers enter the marketplace, which will drive up the demand, which means that I think the prices are going to go up this year.
How about inventory, though? You only create inventory by
Still
building
too
new
low.
houses, right?
Too low.
We need new construction.
Way, way, way more.
Yeah.
The one positive thing is we have a lot of apartments coming online, and you're like, well, how does that impact people that want to buy a home? Well, homeowners oftentimes, think about that little old lady and the little old man, they then have a place to go and move into that home or into that apartment, and that puts that home up for sale. And some of these homes that maybe these older people have lived in for 40 plus years are great homes for first-time homebuyers. When I first started doing this 20 years ago, first-time homebuyers bought starter homes. But something happened over the last 10 years or so, and so many first-time homebuyers have been buying new construction and these beautiful 3,000 square foot homes. The culture shifted, but now the culture is shifting back. I think primarily because of price and affordability. But first-time homebuyers are buying starter homes more and more so now. But again, we need all levels of inventory to start rebalancing, the demand that we have in the market. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.